This conference will now be recorded.
It is a very nice rainy evening, and we are at in a way, we are at the end of our innings for ITR filings for non-audit cases. So obviously, we would be very busy, and it's good to see so many people coming over here after taking their precious time. Uh, Actually, we had a discussion with Bhadresh Bhai that there are many changes coming up in Income Tax Act, and he was kind enough to accept our invitation to take the recent pronouncements on income tax on in today's session. So, without delaying, I would request we would start the session, and I would request CA Ashish Gori to give a introduction to our today's speaker.
Good evening to all the seniors and friends in the fraternity. Today, Ghatkopar Study Circle has given me a blissful opportunity to introduce the speaker for the day. Let me introduce CA Bhadresh Doshi. We all know him since long. He casually doesn't need any introduction, but still, formally, I'll go for that. He's a BCom. He's a chartered accountant, passed out in November 2001. And it is an utmost pleasure to let you all know that he has been a merit rank holder for all the examinations. He has achieved 23rd, 33rd and 11th rank in foundation, intermediate and finals respectively. And he has also done advanced diploma in international taxation. Professionally, he has been practicing as Messrs. Bhadresh Doshi and Associates since last 20 years. His core areas of practice are litigation matters up to IT-80 levels and consultation on income tax matters, including international taxation. This was his professional introduction. Let me let you all know his participation in various forums. He has been member of Managing Council of Bombay Chartered Accountants Society. He has been member of Journal Committee and Taxation Committee of BCAS. He has been member of General Committee of CTC. He has been co-author of controversy article which is published every month in BCA Journal. He is an author as author of a book on Income Declaration Scheme 2016 for BCAS, which he had an occasion to present on Honorable Finance Minister to Mr. Arun Jaitley. He has been a paper writer for BCA's RRC. He has been co-author for budget publication and referencer of BCA's. He has taught direct tax for CA final students for 7 years. Written several articles on income tax on CA journals, taxman journals. He has presented papers on taxation at various forums. Well, I know it's gone long, but there are so many things that he has already done. So this was a short introduction of the great man, CA Bhadresh Doshi.
I would request Jatakia sir to present a memento on our behalf. I would request Bhadresh Bhai to start the session.
Convener of Ghatkopar Study Circle, Yogesh Bhai, my guru Nalin Bhai, all seniors and my dear friends. Good evening to all of you. Before I begin the discussion on the topic allotted to me, I would like to thank Ghatkopar Study Circle from bottom of my heart for giving me an opportunity like this every year, at least once in a year. I think last when I led the study circle. It was in July 21, just exactly 1 year ago, on a restructuring of partnership form, that is 9B and 45(4). I feel more energetic and happy today as compared to that, because that was a virtual session. And after a very, very long time, I'm happy to see all of you in person. It makes a lot of difference when we deal and discuss the topic virtually as compared to in person. So I'm sure that today I'll be benefited by this personal physical session, the exchange of views and knowledge. Friends, I have been given the task of dealing the recent decisions. Actually, when I was informed to deal with the recent decisions. So I'm just clarifying this, that the though topic is titled as recent pronouncement, but I would be able to deal only with the recent decisions, considering the numerous decisions which have come in just last about 6 to 8 months or a year or so. Uh, Friends, what I've done is that I have selected some of the decisions from Supreme Court till IT80 uh, as per my convenience. Those decisions which I felt that they are more easier, and therefore I have selected them, that I would be able to deal with them. So if you feel that I have missed out some of the important decisions while presenting this, please excuse me for that. Nevertheless, what I've done is that I've selected the decisions in a way that they should be helping us while dealing with our clients in our regular practice, day-to-day practice. Some of them you might feel that they are not relevant, okay, but I'm sure might be not relevant today, but it is clearly giving us a hint as to how the judiciary has started thinking on the new provisions which have just been introduced, which are just 1 or 2 years old or 3 or 5 years old. And therefore, by dealing with those decisions, perhaps we will be more equipped when we put up our case, when we represent the client's case before the assessment centers, as to what all dimensions which we need to cover. So with this, let me begin my presentation. So the most celebrated decision in this year was Ashish Agarwal from Supreme Court. Most celebrated in the sense, most celebrated by the revenue, by the government of India, not by the SSS. And I'm sure that everyone sitting here must be aware about this decision of Ashish Agarwal by Supreme Court, and therefore idea is not to discuss and deliberate this decision of Supreme Court in the case of Ashish Agarwal. Everyone of sitting here must have received at least one or the other notice from the department stating that particular decision in a letter and asking us to show cause as to why we should not proceed for issuance of a fresh notice under section 148. So all those notices which were issued after 1st of April 2021, by enjoying the extension of time limit which was given under TOLA, which were earlier quashed by several high courts, Supreme Court deemed those notices to be a notice issued under section 148A, new provision, clause B, giving an opportunity to the SLC to represent his case, that why he should not be issued a final notice under section 148 for the purpose of reopening of the assessment. Thereafter, CBDT issued a circular, rather instruction, laying down certain parameters and clarifying certain positions and instructing the assessing officers as to how they should proceed in light of that Supreme Court decision. So in view of this CBDT's instruction specifically, I would like to discuss this Bombay High Court decision. The decision on the screen, friends, is a Bombay High Court decision which was prior to a Supreme Court decision. Now, Supreme Court decision is already available on this Bombay High Court decision. But the point which I would like to deal from this Bombay High Court decision is a very limited aspect which has been considered by a Bombay High Court. And I would be leaving this question to you is because the Supreme Court has not overturned any of these observations of the High Court decision. Rather, if you read that Supreme Court decision in the case of Ashish Agarwal, In the initial discussion, the Supreme Court agrees with all of these High Court decisions in principle that as per the correct legal interpretation, the view taken by the High Court is the correct view in general, not with respect to any specific observation. And therefore, it is very interesting for us to note as to what were the observations of Bombay High Court and the Tata Communications Transformation Services Limited. The observation of this Bombay High Court in this decision was with respect to several classes of the assessment, several categories of the assessment. So one of the categories of that assessment which the Bombay High Court was dealing was with respect to the notices which were issued for assessment year 15-16 and subsequent years. And there the Bombay High Court categorically observed that the notification which was issued under TOLA extending the time limit, that will never apply to this particular assessment years, that is assessment year 15-16 and subsequent years, is because they were not becoming time barred at all by 31st of March 2020 or by 31st of March 2021. Okay, I will be putting the exact sentence from that Bombay High Court decision in front of you in my slide, and let's just read that sentence. And then we will try to deliberate and discuss as to what are the consequences of this particular interpretation. The High Court observes in its order that in any case, Relaxation Act is not applicable for assessment years 15-16 or any subsequent year. And hence the question of applicability of notification number 20 or 38 of 2021 does not arise. The time limit to issue notice under section 148 of the Act for assessment year 15-16 onwards was not expiring within the period for which section 3(1) of Relaxation Act was applicable. And hence Relaxation Act could never apply for this assessment years. As a consequence, there can be no question of extending the period of limitation for such assessment years. What do I understand from this particular paragraph of the Bombay High Court decision is that we are talking about the erstwhile provision of section 147, 148 and 149. And here in the light of those erstwhile provision, Bombay High Court observed that if you consider from assessment year 15-16 onwards, the time limit under the old provision for issuing the notice under section 148 was 6 years. We are talking about a general case. We are not talking about a case where the income is below 1 lakh and therefore time limit of only 4 years are applicable, or with respect to foreign transactions 16 years time limit is applicable. We are talking about a general case where the time limit for issuance of a notice under section 148 was 6 years. And therefore Bombay High Court observed that for assessment year 15-16, if you consider the 6 years time limit, it will expire on 31st of March 2022. And obviously for subsequent assessment years, the time limit would be expiring thereafter. And if you read this TOLA, that is Relaxation Act, and the notifications which were issued under the powers given to the government under TOLA, the extension of time limit for issuing notice under section 148 was applicable only in a case if the time limit was expiring during that period in which that COVID was prevailing. That is up to 31st of March 2021. What do we mean by this? That if the time limit was expiring on 31st of March 2021, then that notification and issued under TOLA had given an extension of that time limit till 30th of June 2021 for the Income Tax Department to issue a notice under section 148. And therefore, as a corollary, if the time limit was not expiring on 31st of March 2021, there is a need of an extension. If the time limit was anyway expiring on 31st of March 2022, can it be said that we are extending the time limit till 30th of June 2021? It's quite illogical. And therefore, Bombay High Court categorically observed that TOLA as well as notification issued under TOLA extending the time limit were never applicable to assessment year 15-16 or any subsequent year. I hope this position is very clear to all of you. Now, in light of this Bombay High Court's decision, let's read that severity instruction. That severity is instruction 1 of 2022, and it puts the types of the assessment into several categories. And once again, one of the category, which is for AY 16-17 and 17-18. Okay, CBDT here clarifies that fresh notice under section 148 can be issued in these cases with the approval of the specified authority under clause A of 1 of new 149 of the act, since they are within the period of 3 years from the end of the relevant assessment year. Now the question over here is that the position which has been taken by CBDT under this particular instruction with respect to AY 1617 and 1718, is this position correct? Is a question. If you are not clear with this particular interpretation of this particular sentence which has been mentioned in this instruction, is that CBDT in a way is clarifying that if you are looking at assessment year 1617 and 1718 and assuming that the amount of income escaping the assessment was not exceeding 50 lakhs. Now under the new provision we have two baskets, income not exceeding 50 lakhs and income exceeding 50 lakhs. For the first basket the time limit is just 3 years. Okay, the second one the time limit is 10 years. So in a case where the income escaping the assessment was not exceeding 50 lakhs, the time limit was 3 years was applicable. CBDT here is taking a view that for AY 1617, if you add 3 years, it was expiring on 31st of March 2020. For AY 1718, it was expiring on 31st of March 2021. And therefore, both of these time limits were expiring during that period for which the extension was given by TOLA by virtue of a notification. And that time limit was extended till 30th of June 2021. So here, the Bombay High Court's observation and what the view taken by CBDT under this particular instruction is exactly contrary to each other. CBDT in a way is trying to put a position that the notification extending the time limit from 31st of March 2021 till 30th of June 2021 was issued on 31st of March 2021. However, the new law which restricts the issuance of a notice only till 3 years, that is new provisions of section 149, came in force on 1st of April 2021. I hope you are clear on understanding of both these effective dates. And what is CBDT is doing now? CBDT says that the notification which we had issued on 31st of March 2021 extending the time limit till 30th of June 2021 will also apply to a new provision which came in force on 1st of April 2021. Is this possible? पहले एक्ट आएगा उसके बाद नोटिफिकेशन आएगा या पहले नोटिफिकेशन आएगा उसके बाद एक्ट आएगा? The CBDT says that look, we have already issued a notification extending the time limit, and that notification will apply even to a new law which is coming in force subsequent to the date of notification. Is this something which is possible? Is this interpretation which is acceptable? And that is the reason why I am just putting this particular point across to you, that the correct interpretation according to me is that for assessment year 1617 and 1718, if the amount of income escaping the assessment is not more than 50 lakhs, they cannot proceed with the issuance of a notice under section 148 at all, because the time limit of 3 years have already expired on 31st of March 2021. The extension notification can't be made applicable to that particular time limit, extending it till 30th of June 2021. And I derive the support from that decision of Bombay High Court, which clearly tells us in very clear language that extension notification is not applicable to assessment year 15-16 onwards at all. So when a Bombay High Court is taking this particular view, how can it be made applicable for the purpose of issuing a notice by CBDT in this instruction is a question which I am just leaving it to you. So that was the only limited purpose with which I just wanted to revisit that particular controversy which arose from that Ashish Agarwal's decisions, which is given by Supreme Court. The next decision which I have selected, so now few of the subsequent decisions, and I will be spending around at least an hour on the decisions for understanding the concepts of the reassessment. Okay, is because nowadays we have practically just forgotten the provisions of regular assessment 143.3 because it is practically not happening at all. And nowadays we are living in an era where we have more number of reassessments. Okay, today we are in 2022 and practically the SSCs have been asked to submit the informations, documents, evidences related to assessment year 13-14, financial year 12-13. Okay, we are talking about a time period after which the 8 years have already lapsed, and now the SSs have to dig out the informations, documents, evidences to submit them before the authorities, and therefore the reassessment has now become very, very crucial. So once again, one of the important decision of Bombay High Court, which is in the case of Tata Capital Financial Services Limited. And friends, this decision is under the old provision. It has nothing to do with the new provision. But I'm very sure that we can derive the support from the observation of the Bombay High Court in this decision, even under the new provisions as well. What has happened is, in case of Ashish Agarwal, Supreme Court laid down certain parameters, issued certain instructions to the Department Revenue, and one of them was that assessing officers were asked rather to supply the information and material to the SSEs and to give 2 weeks time period to furnish the reply. If you read that sentence, it talks about supplying of the information and material on the basis of which they had earlier issued the notice under section 148, taking a position that the income has escaped the assessment. However, I am very sure that you must have experienced that in many of the cases they have not given any information at all. They have not given any material. In few of the cases, what they have done is that they have given a printout from the inside portal, which just lists down the list of files which they are able to view in on their screen under the inside portal. So what will happen is that I'll be given a letter, and in the letter they will say that, look, we have supplied all the information and material in accordance with the Supreme Court direction, and the annexure is attached. And if you look at the annexure, you will realize that a statement of third party is given, but that statement is just a PDF file which is given in the list. They have given a list that we have all these files, okay, but those files have not been given to us. These are many such cases in which all these things have happened, and that is the reason why this Bombay High Court decision is becoming very, very relevant. And here Bombay High Court has laid down a guideline which is required to be followed by the income tax department as far as the reassessment under the old provision is concerned. And Bombay High Court said that when the SS is asking for a reason, the officer should not issue merely a letter giving the extract of the reason. That is something which is not permissible. The assessing officer has to actually give a copy of the same memo in which originally they had recorded the reasons and which was forwarded to their higher authorities for obtaining a sanction under section 151. Otherwise, in normally all cases, what happens, they just give an extract in the letter that the reasons recorded for reassessment are as follows, and they just reproduce the reasons. Last year, in all those cases, they had issued 143.2 notice, and in 143.2 notice, they had given an annexure in which they had reproduced the reasons. High Court is clearly laying down the guidelines that this should not be done. Assessing officer should actually give a copy to the SSE, the same document, which is a 151 format. They have internal format in which they have to record the reason, they have to forward it to their higher authorities. Then they say that Bombay High Court is mentioning here that if in the reason, if you are referring to any reports, letters, etc., any documents, then merely giving the reason is not enough. You have to supply copies of all those documents which you are referring in the reasons. And here, please note that indirectly the High Court is even referring to the internal documents as well, because they are clearly clarifying that if there is irrelevant portion, that you can just hide it, but otherwise the relevant portion from all the documents and reports are required to be given to the SSE. If the SSE is raising an objection against the reopening of the assessment, then the assessing officer has to pass an order dealing with each of the points on which the objection has been raised. Otherwise, what they do is they just put two paragraphs, some of the irrelevant decision, which has nothing to do with your case, which has nothing to do with your point on which you have raised the objection. Further, Bombay High Court says that when SSE is raising an objection, the assessing officer has to give a personal hearing before disposing of the objection. And look at the last point. It goes beyond, and High Court says that if you are planning to put any decisions in a disposal order, in that case you should provide this decision first to the SSE in a personal hearing. and give an opportunity to the SSE to decide whether the decision is applicable to you or not, whether you are able to distinguish these decisions or not, and then only you can use these decisions. These are the observations of the Bombay High Court, but unfortunately, these observations always remain on paper. It never comes in practice. That's the problem. One more interesting decision of a Bombay High Court in the case of JM Financial and Investment Consultancy. It is on the obtaining of a sanction under section 151. Very interesting position arose. This was a case which was for assessment year 15-16. 148 notice was issued. SSE asked for the copy of sanction. This is very important. We should ask for the copy of sanction in every case of reassessment, because we may never know as to when and which stage there can be some technical lapses on the part of the assessing officer and which might help the SSE. This is a classic case. Okay, so here the SSE asked for the copy of sanction and the copy was provided, and SSE realized that the sanction was taken on 26th of March 2021 and the sanction was taken from the additional commissioner. And this was under the old provision. March 2021, new provisions came in effect from 1st of April 2021. And therefore, if you go to the old provisions, the requirement of obtaining sanction is divided into two categories. First, if the notice is issued within 4 years, then the sanction is required to be taken of joint commissioner. But if the notice is issued beyond 4 years, then the sanction is required to be taken of commissioner or chief commissioner or principal commissioner, etc. That means higher authorities. There are enough controls which have been placed in the provisions of section 151 depending on the time period within which the assessing officer is proposing to issue the notice. And here the SSE realized that assessment year 15-16 and sanction which is taken in March 21, that is beyond 4 years, and therefore technically speaking the sanction was required to be taken of commissioner or chief commissioner. However, in this case the sanction which was taken of additional commissioner, it was clearly in violation of the provisions of section 151. However, when the matter reached Bombay High Court, on behalf of the department, it was argued that look, this was a COVID period, and during COVID period, that TOLA Act was notified, and under TOLA Act, the extension notification was given, and the period which was expiring was being extended. The period which was expiring in that COVID period, that is 18th of March 2020 till 31st of March 2021, was later on extended to 30th of June 2021. And therefore the same position was taken by the department that though here 4 years, if you look at, I'll just go back to the previous slide. So assessment year 15-16, 4 years were expiring on 31st of March 2020, and therefore department took the stand that as per that extension notification, that 4 years period should also be considered as extended up to 30th of June 2021, and therefore the assessing officer was correct in obtaining the sanction of additional commissioner of income tax which was taken on 26th of March 2021. Interestingly, fortunately, High Court observed that you have been granted the extension, but for what? Correct? The extension was granted only for the issuance of a notice. The time period which was provided under section 151 was never been extended. And therefore, you have to read TOLA, you have to read the notification, and by reading both of this, definitely one can come to a conclusion that the extension is granted only for the purpose of issuance of a notice, which has nothing to do with the time period which is provided under section 151. And therefore, High Court took a position that here the sanction has been taken from a wrong authority, and therefore the entire assessment was considered to be an invalidly initiated and it was being quashed. Now, friend, this is a position which even I have personally experienced in number of cases, particularly this will apply in a unique case of assessment year 15-16. In number of cases for assessment year 15-16, the assessing officers have taken the sanction of joint commissioner. You can go back, check your files. If you don't have a sanction copy available, friends, you can open 148 notice. And in 148 notice, the last sentence of that 148 notice always invariably mentions that this notice is issued with the approval of so and so authority. And if you look at the notices of assessment year 15-16, and if they have mentioned that this notice is issued with the approval of range head, range head is nothing but joint commissioner of additional commissioner, and therefore this decision J of JM Financial is clearly applicable to you. You can take a position that this particular assessment proceeding is invalidly initiated and is required to be dropped. Whether department would be dropping it or not is a matter of fact. But this is the decision of Bombay High Court, and certainly when you reach to some higher appellate authorities like CITAP or ITAT, if this objection has already been taken by us before, the assessing officer would help us. If we are not raising the objection and then taking up this particular point directly at some higher appellate authorities can be taken. I am not denying this, but that would be a very difficult stand to be taken. One more Bombay High Court decision in this case of Switzer Hazaria Private Limited. Look at how minutely the SSEs are looking at the notices. And here the SSE observed that I have been given a notice under section 148, and now fortunately this digitally signed notice has a time stamp as well, not only the date, but even the time at which that digital signature was being attached to that notice. And here the SSE observed that 148 notice which has been given to me is digitally signed on 31st of March at 2:40 p.m. When the SSE asked for that sanction memo which was given under 151, that is also digitally signed by that commissioner or joint commissioner. And they observed that 151 memo was digitally signed at 2:55 p.m. That is 15 minutes after the notice was digitally signed under section 148. And if you read section 151, it says that no notice shall be issued under section 148 unless it is sanctioned or approved by these following authorities. And here, therefore, SSE took a stand that this 15 minutes delay of obtaining a sanction, the assessing officer issued notice first to me, and thereafter he took the sanction of that higher authority under section 151, and Bombay High Court accepted this particular point and quashed the entire proceeding, considering it to be an invalid accordance with law. So, okay, not only the designation of the authority which is giving a sanction in a particular matter, but even what is the time stamp on the 148 notice and 151 sanction which has been given to us. Yes.
Equally applies to when we sign the audit reports also. Because the client has signed the earlier or the auditors have signed. Many times digitally signed documents have been uploaded. Where this care has to be taken.
Obviously. Another important position here is this is a case of an Allahabad High Court where the notice was digitally signed by the assessing officer on 31st of March 2021, but the email containing that notice was received by the SSE on 6th of April 2021. So now we are entering into another dimension, not only timestamp, but now what is important is what is the date and time on which that email has been received by the SSE containing that 148 notice. And on this particular very point, the SSE filed a writ petition before Allahabad High Court on the ground that the requirement as per the provision is about the issuance of a notice. And I have received this notice by email on 6th of April 2021, which is after expiry of that particular time limit. Ignore that extension which has been given for the time being, because if you apply the extension and then take a position that even if this is the position, it is well within that extended time limit, in that case, Ashish Agarwal Supreme Court decision will apply. And now this notice will become a deemed notice issued under section 148A. Okay, so it is very important for someone to decide whether this notice is issued by 31st of March 2021 or post 31st of March 2021. And here, the High Court interpreted the provisions of section 149 and particularly just one word. The word was issue. And what is the meaning of issue? There was a Gujarat High Court decision, old decision which I recollect of Kanubai Patel, where they were not under this era of this technological development where the notices were being physically sent by post. And in that case of Gujarat High Court Kanubai Patel, the facts were the notice was physical notice, where they used to fill up everything, the SS's name, PAN number, address, assessment year. So everything was filled up. It was signed on 31st of March, bang on the last day. That is what they do. It was being signed on 31st of March, but thereafter it was being handed over to the postman for delivery through speed post, postal department, after 31st of March. And there Gujarat High Court took a position that here what is required is issuance of a notice within the time limit, because the time limit of 4 years, 6 years, whatever it may be, is for issuance of a notice. There is no requirement of service of notice. If you compare the provisions of section 143.2 and 149, 143.2 provides for service of notice within 6 months. And therefore, for regular assessment, what is required is issuance of notice is not sufficient. The notice is required to be served within 6 months. But in contrast, if you read section 149, there is no requirement of service of notice. 149 provides that the notice should have been issued within this particular time limit. However, the High Court interestingly interpreted this word issue, and High Court held in that particular decision of Kanubai Patel that what is the meaning of issue? If the assessing officer is filling up a form of that particular notice, that pro forma, signs that notice and keeps that notice in his drawer, can it be said that notice has been issued? Certainly no. And therefore, High Court went in the dictionary meaning of this issue, etc., which I'm not going into. And simply High Court observed that issue means something which is going out of my hand should be considered as issue. Till the time that thing is remaining in my hand, I cannot say that I have issued this. A very simple and logical meaning of this. And therefore, there in that decision, in those era, High Court took a view that since that notice was handed over to the postal department for onward service through speed post, after 31st of March, the assessing officer has failed to issue the notice within the time period. Now, extending the same principles here, the Allahabad High Court, even in this particular case, took a view, extending the same interpretation of the term issue. And here the High Court took a view that now this is further supported because now this notice has been sent by an email. And now the Information Technology Act would apply. And if you apply section 13(1) of Information Technology Act, it says that the dispatch of an electronic record occurs when it enters a computer resource outside the control of the originator. That means if I have to send you an email, when can I say that I have sent or issued that email? If I merely draft it and I put it in my box, it cannot be said that I have sent it. And therefore, there is a definition that dispatch of an electronic record, which includes this email, it says that that would occur when it enters the computer resource which is outside my control. Okay, so it should have entered the server of that email, which should not be within my control. It is at that point in time that dispatch of an email occurs. And applying this, the High Court observed that merely signing that notice digitally on 31st March is not enough. And since that notice was being received by the SSC on 6th of April, it was considered to be a notice issued post 31st of March, and accordingly, whatever consequences were applicable, the High Court held that all those consequences would apply. This was one of the case. Consider one more case of Madras High Court. Similar facts, slight difference. Here the department could produce the record probably, I don't know, but it appears from the reading of the decision. And I have failed to understand as to how this can happen, but it has happened because it's a facts. These are the facts which are recorded in the High Court decision, which we can't dispute. And here the facts which as recorded by the High Court in its order says that notice was issued by an email at 6:42 p.m. on 31st of March, but I received it on 2 a.m. early morning on 1st of April 2021. Now the question is whether this notice is a valid notice. What do you feel? It's a valid notice, no, because we already discussed. If the email has been sent, though you have not received it due to some or the other problems, we fail to understand how this can happen in today's world. somebody sending notice at 7 o'clock in the evening and I receive this at 2 a.m. in the morning. I don't understand how this can happen, but it has happened for some or the other reason. And therefore, High Court here once again applied the same principle, same interpretation of issue, same definition from Information Technology Act, and came to the rescue of the department, stating that look, the email was sent on 6:42 p.m. 31st of March 2021. It has entered the computer resource which is outside the control of the assessing officer, and therefore we are going to consider this as an issuance of a notice, and this notice was considered to be a valid notice. Notice was considered to be a valid notice. Yes. So now we are in a confusion stage, right? And even Delhi High Court third case, Delhi High Court in the case of Vinay Kumar Dhingra is also in that confusing state of mind. And therefore now this case is not a finally pronounced decision. I have mentioned that this is still pending before Delhi High Court. We are awaiting for the decision. I think hearing is also not concluded to the best of my information. But here Delhi High Court has understood all of this complication and now divided all these cases into 5 different categories. Look at the kind of complication which is going to arise, friends. Okay, these are the simple points on the basis of which a position can be taken in a particular case if you want to defend the case of the SSC. We are not on merits, friends. Still, we are still on technicalities, mere technicalities. So what all 5 cases in which the High Court has divided? There were numerous cases before Delhi High Court, and there was no one conclusion which was possible, which can be made applicable to all the cases. And therefore, High Court said that, look, what we are going to do is we are going to divide all these cases into 5 baskets, and we will decide one by one. So the first one is where everything is post 1st April 2021, digitally signed after 1st April 21, sent, received on or after 1st April 2021. This is the first category, and I believe that this would be the simplest category for the High Court to decide. And I'm very sure that this notice would be considered as an invalid issued beyond time limit. The second one was notice is not digitally signed. Now you must have experience, or rather now you will notice, if you have not noticed because of all this discussion, that in many of the cases the notice is issued under 148R containing digital signature, but in many of them the digital signature is not there. It is a mere PDF copy without any digital signature. The question is whether such notices are valid notice or not. We are not answering that particular question today. But High Court has put that in the second category, which says that notice which does not contain any digital signature, but it has been sent and received both after 1st of April 2021. The third one is a case where the notice is digitally signed before 31st of March. There is a digital signature. It has been signed before 31st of March, but the email was sent and received both after 31st of March. The same case which we discussed, the earlier one. Fourth one is where a notice is digitally signed before 31st of March, but email was not the mode of communication at all. There was no service of notice either by email or by post, and SSE came to know about this notice on his own. When he went on the portal, he realized that there is a notice in my account, or he had been issued another fresh notice under section 142(1), which has been delivered. But earlier 148 notice has not been communicated to the SSE at all. So this is the fourth category which the High Court is going to consider. And the fifth and last one is a notice which is not digitally signed but manually signed. This is the third case now. We had a case where notice is not signed at all. We had a case where notice is digitally signed. Now we have a third case where notice is manually signed. And it says that, but it is not served by an email, but it was dispatched to speed post on or after 1st April 2021. Something like that Kanubai Patel Gujarat High Court decision, which I just mentioned to you. So perhaps you would be needing one session on this after we have the Delhi High Court decision available to understand as to what all benefits are available from this Delhi High Court decision. Let's move on. One more case, once again dealing with 148 notice, is obviously a difficult case for the department today in the absence of any provisions under the law. The notice was issued under section 148 in the name of a person who was already dead at that point in time, not alive. Department is unaware about the death of that SSE, and therefore the difficulty is that whether that notice issued under section 148 in the name of a dead person, is it a valid notice in the eyes of a law? And here the Bombay High Court Nagpur bench, in this case of Bandu Sambharkar, has taken a view. Has in fact there was already a Bombay High Court decision which is in the case of Rupa Shyam Sundar, Mumbai jurisdiction, and followed the same decision. And High Court took a view that if that person is not alive at that point in time when the notice under section 148 was issued, that notice would be considered as an invalid notice in the eyes of law. If the person was alive at that point in time and thereafter he is dead, the assessing officer can continue that valid reassessment proceeding against the legal representative. And friends, this is irrespective of the fact that death of the SSC is not communicated to the department. That is exactly that Madras High Court decision, Allah Mellu Virappan. And Bombay High Court has followed that Madras High Court decision in the case of Allah Mellu Virappan. And interestingly, if you read, one should read that Madras High Court decision in the case of Allah Mellu Virappan, where the counsel appearing on behalf of the revenue cried before the High Court that if the SSE is not informing us about the death of the SSE, how come we should know this fact? And how can you expect us to issue the notice in the name of legal representative? And their High Court answered that particular question, very interesting, and raised another question in counter, that do you have any provision under the Income Tax Act requiring the legal representative to inform the death of the SSE to you? How can you expect? You first need to bring out the provision and then you ask the SSE to inform. In the absence of any provision, how can you ask every citizen in this country that if there is a death in your family, you are a legal representative, you please inform to the Income Tax Department? And therefore turned down that particular argument of the counsel who was appearing on behalf of the revenue. He said nothing doing. There is no requirement under the law. In the absence of any such provision under the law, even if you are not informed, if the notice is issued in the name of a dead person, we are going to consider it as an invalid notice. And friends, this is not the only decision. There are a number of such decisions now coming from several high courts on the very same point, and they are treating all these notices as invalid notices. Yes, friend. So if there is a discontinuation of the business, then there is a provision to inform. Yes. It's a discontinuation of the business, not the death of the business. Correct? So if you are continuing the business even after death, technically you are not supposed to inform because the business has continued. The legal heirs, the legal representatives are continuing the same business. So the intimation is to be given for discontinuation of the business. Correct. Yeah. Sorry? But what is the change here? There is no field whether the person is alive or not. What is the change in the pen data? There is no change.
SSC is expired. Return is being filed thereafter using that digital signature.
That should be considered as a non-nest. That's a mistake on the part of the SS. No one should do that.
If it is done in that case, then whether department cannot carry out assessment also.
Can carry out the assessment. The requirement is that the notice of assessment and the assessment order both should be in the name of the legal representative. Notice if it is issued in the name of a dead person. If you read, high courts are going.
In that case, you have filed the return. Again, that you should be aware of.
Correct. Correct.
Your Aadhaar data is linked to PAN data. And immediately once you take a death certificate, the Aadhaar data is updated. I think. So, government can access that, but they are
Possibly, yeah. We have a number of cases where even in spite of informing this, they proceed with issuance of notice in the name of dead person. We have several cases where the same assessing officer is doing the assessment of 1 year, knowing that the person is dead and making the assessment in the name of legal representative, and then issuing notice for the 2nd year in the name of a dead person. And there are problems with the department as well. Because if you go to their system doesn't permit for issuance of notice in the name of legal representative. Okay. Uh, one more case dealing with reassessment. Huh?
Technical issue.
Technical
Then
issue.
in such cases, in all the cases where the person is dead with no notice can be issued.
In the name of that dead person,
Yes.
the assessment can be done by taking the legal representative on record and then issuing notices in the name of legal representative. Please note that I am not on the point that this person is now no more taxable. The point is only issuance of a notice. The point is not that after death of that person, that income of that person cannot be taxed. The assessment cannot be made. The recovery cannot be made. I am not on that point. All these things can be done. But for doing all those things, if the department wants to make an assessment of the income of that person who is already dead, then the requirement is the legal heirs, the legal representative of that deceased person are required to be brought on record, and then notices and the orders are required to be issued in the name of those legal representatives. That is the requirement of the law.
Now, supposing in such a case where the notice is received by the legal heir in the name of the dead person, he informed that this person is died.
Yeah.
Now, then the officer can take him on record. And
Yes,
say,
he has to drop that notice and he has to issue a fresh notice in the name of legal representative.
that should be within the time.
Obviously, in all these cases, the difficulty is where the time, because they wake up always on the 31st March, 31st March of the 6th year. The time is gone.
But there is like the registration of the legal hair on the website is a mammoth job. You can't get registration.
Yeah, that is
So you need to have a bank account which is jointly or having a nominee of that legal heir. That is a requirement, or you else obtain succession certificate, etc.
Generally, the bank account is a unique one. Suppose you have a joint account, no? Then it is possible.
Then it is easier.
People are doing through bank account.
Yeah, then it is easier. Okay. Now moving on to the next case, which might help a lot of cases dealing with all the search in the case of Mr. Bharani or Evergreen Builders, etc. Now there are two types of the transactions, lender and borrowers. So I need not go into the detailed facts of that particular group. So there are two groups of the SSE, the lenders and borrowers. And in many of the cases, we have experienced that the department has reopened the assessments of both of this, lenders as well as borrowers. Now, we are dealing with a case where the matter has been reopened in the case of a borrower. Okay, so the facts are, which were the facts in this case. We don't know whether these are real facts or not, but these were the alleged facts as recorded in the reasons by the assessing officer. And what were the facts? The assessing officer mentions. So this is the concluding paragraph from the reasons recorded for the purpose of reopening. And assessing officer says that, look, I have a reason to believe that you have accepted cash loan of 16,30,000 cash loan. And then he says that therefore you have violated the provisions of section 269 SS, and therefore the income has escaped the assessment. And he reopens the assessment, issues 148 notice, and this fellow is reaching to High Court for questioning that notice under section 148. And High Court agrees to this. High Court says that you first decide whether it is a loan taken or it is an income. Any particular receipt cannot have a character of both of this. How can a department claim that this particular receipt is a loan which is borrowed by you as well as it is your income escaping the assessment? How is this possible? If it is a loan, it is not an income. If it is an income, it is not a loan. And therefore, in the reason when you are saying that you have borrowed a loan in cash, that itself is sufficient to come to the conclusion that there is no question of any escapement of income at all. And the entire notice under section 148, which was issued on the basis of this facts, was quashed. But leaving the department with the right to proceed as per the law as far as violation of 269 SS is concerned. High Court is not making any comment whether it should be penalized, it should not be penalized or not. whether really he has taken this loan or not. High Court is not going into any of these facts. High Court is leaving that particular question and rights of the department open, that as far as violation of 216 and SS is concerned, you can take the recourse which is available under the law, but certainly this is not a case of an escapement of income, and notice under section 148 can never be issued at all.
But Mr. Bhanani has already retracted the statement.
Yes,
Therefore,
then department has to prove that these transactions are real.
will it be in the favor of the SS?
God only knows. Okay, now coming to another interesting position in this particular case of a Karnataka High Court, which one must have never thought of, or at least I'll never venture into this. This is a case where this particular company was issued a notice under section 148, and company took an adventurous position, filed a return in response to a notice under section 148, declaring income lower than the income which was already declared in the return which was filed under section 139. Department is expecting the SSEs that you can come out with a disclosure of additional income, and that is the reason why we are issuing 148 notice, that you verify your records, and if you feel something has escaped the assessment, you may please include all of this and file your return. But here company took the reverse position, reduced the income because there were some losses on sale of security which was remained to be claimed earlier, and they claimed that particular loss in the return which is filed in response to a notice under 148. Assessing officer obviously didn't like this and disallowed that particular loss. Matter reached to High Court. Probably all the lower authorities disallowed this particular claim. Matter reached to High Court, and it is interesting to note that High Court has directed the assessing officer to consider this particular claim, which is made for the first time in the return, which is filed in response to a notice under section 148. There are contrary decisions as well, friend. This is not the decision in isolation. And let me clarify for every concept that whatever decisions which I'm discussing over here, it's not the sole decision on that particular principle, perhaps in majority of the cases. So here there is a direct contrary decision of some other High Court. If I remember correctly, it's a Karya Mangalam Society's case, where High Court has held that the reassessment provisions are for the benefit of the department. Please don't raise any fresh claim when you file a return or when you are facing the proceedings of reassessment under section 147. And perhaps to my mind, that should be a correct position as per the law. But here, the High Court has taken this particular, accepted this particular principle, more so that this was a case where regular assessment was not done. It was just a 143(1) intimation and followed by a reassessment notice. And particularly in this facts, the High Court took a favorable position, holding that the SSE is entitled to raise a fresh claim. The Supreme Court has already issued the SLP has been admitted, and Supreme Court has already issued a notice on this particular case. This is pending before the Supreme Court. I feel that for SSEs, this would be a little weak case as far as taking any benefits in the ITR which you are filing in response to a notice under section 148. I am just drawing your attention, okay, that this is something which is also available as on today. और करेंगे तो भी क्या हो गया? Probably you will not be penalized because you have a High Court decision in your favor as it stands today. Allahabad High Court decision. Now let's come to what is happening currently as far as the new provisions of assessments and reassessments are concerned. And this is very interesting decision which I read in a writ petition which was filed before Allahabad High Court, Harish Chandra Bhati. This was a case where the SSE was one of the co-owners. There was an agricultural land, several co-owners, and that agricultural land was sold during the year. The SSE's case was picked up for the reassessment on the ground that income has escaped the assessment because we believe that this is not an agricultural land. The assessment was picked up not only of Harish Chandra Bhati, but it was reopened also for his son Dushyant Bhati Both of them were co-owners. Apart from other co-owners, we don't know what are the facts as far as the other co-owners are concerned. But because these were father and son, we know the facts and which have been recorded by the High Court. The matter reached to NFSC. In NFSC, the son's assessment is accepted. That yes, this is an agricultural land, not taxable, not chargeable to tax, and this capital gain should not be taxed. But in Harish Bhathi's case, the NFSA did not accept the evidences and held that this capital gain arising on sale of land is chargeable to tax. Same piece of land, two different co-owners, NFSA taking contrary position as far as their assessments are concerned, and the SSA did not like this. The SSC filed the writ petition before the High Court. High Court also did not like this. What are the objectives of bringing these faceless things? Initially, if you read subsection 3A of 143, accountability. So High Court issued notice to the department. Ultimately, High Court issued notice to, instructed the Revenue Secretary that you please file an affidavit. What is happening in your department? Mr. Tarun Bajaj was forced to file an affidavit. One should read this decision. Jada kuch nahi hoga, you will feel happy. If you are too much of frustrated due to the adverse orders and all, you should read this decision. So, Revenue Secretary filed the first affidavit, and Revenue Secretary informed the High Court that look, we have already issued a circular in April 2012. That circular which says that if you are a victim of high pitched assessment or assessing officers non-application of mind, etc., you can come forward, file your complaint before a local committee, and then this will be matter will be seized by local committee, appropriate actions would be taken. And therefore Revenue Secretary pointed out that look, we already have the circular and SSC could resort to the benefits which are available, remedies which are available under the circular. In response to this, High Court said that this is a complete eyewash. By appointing a local committee, by appointing a circular, but not clarifying as to what would be the outcome of this. What are you doing? What are the benefits which you have given to the SSCs by virtue of this, to the taxpayers? You should have come out with what is the outcome of this, what are you going to do if the complaint is being received. The Revenue Secretary was asked to file a fresh affidavit for the second time. Mr. Tarun Bajaj, Revenue Secretary, filed another affidavit and reaffirmed that if any such things are found, we are going to take suitable administrative action against those officers where assessments are found by the local committee to be high pitched, or where there is non-observance of principle of natural justice, non-application of mind, or gross negligence of the assessing officers. These are the commitments which have been given by Revenue Secretary, at least on paper, to High Court. The decision of that Mr. Bhati, which I mentioned to you, was pronounced on 19th of May 2022. On 25th of May 2022, another case came before the same High Court, Allahabad High Court, same bench, same judges, some other case, Dharmendra Kumar Singh. What were the facts of this case? This is the case under the new provision 148A, subclause A, B, C, D. A notice was issued under clause B, so-called notice to the SSE, that why we should not issue a notice under section 148, because this was for assessment year 18-19, new regime. That we have received an information that you have purchased a property exceeding value of rupees so much, and therefore a general notice which many of you must have seen. The SSE filed a reply that look, I had booked the property in 2012, though agreement was registered in FY 17-18. I had booked this in 2012. I started making the payments right from 2012. He furnished details of all the payments along with the copy of registered agreements, everything to the assessing officer in response to a so-called notice. We must have also done similar things in response to such cases of property transactions. Now, Thereafter, assessing officer passed final order under clause D and proceeded to issue a notice under section 148. Just वो दो line लिख दिया. Your reply is found to be non-satisfactory. Okay, and therefore we feel that income has escaped the assessment. This fellow reached to Allahabad High Court writ petition. Notice was issued to the department, and the department was asked to file the affidavit. That what is your stand? And you will be surprised to note that concerned CIT of that particular jurisdiction filed an affidavit stating that we want to drop this assessment. But since the High Court has granted a stay over this, we can't do this right now. As soon as the stay is vacated, we are going to drop this assessment. CIT filing an affidavit. Same bench had delivered a decision approach of the department and state that the intention of new regime of 147, 148, etc. is very good, but the way in which they are implementing, look at the field level and the kind of 148D order which they are issuing is frustrating. These are the observations of the High Court. They quest the 148 AD order as well as 148 notice and ask the assessing officer to reconsider least we can just correlate with the achieve the full refund. Third year, once again refund was determined, same thing, same facts, if we see adjusted, full refund. Then somebody must have advised to the SSE that you cannot that this intimation itself is invalid in the eyes of law and struck down that particular disallowance. So under 36(1)(5)(a), now we have three positions to be taken. One, if CPC has not given any notice of proposed adjustment, you can take the help of the Ahmedabad tribunal. Second, you can take the Mumbai tribunal's view, culpis synthetics, that tax auditor is not reporting a disallowance and therefore 143(1)